Welcome back to EDS, and in this video we're going to take a look at how you can manage your positions. It is a Sunday, the market is closed, so we're just going to do a little review on a position that we've been managing. It's starting to become a bit of a pain, but this is the reality of the situation. This is why keeping your position sizing in check is so extremely important. If you're ever in doubt of what's the catch, why does this sound too good to be true, you're about to learn what the catch is in this video. So we've got a position on UAL. Our current position we've got is an inverted strangle, 22 and a half. We've locked in a loss of $22.50 per share. That's the reason why how we figured that out, is because that's the width between the inverted strikes. If you were to have a look on the chart and see how the position looks, this is how it looks. We entered the position here around August 16th, 19th ish. And price literally just went straight up and completely against us. We were stuck in the position for earnings. Earnings for UAL was good. And then we had this massive green bar. And we had these three green bars with this big one being on the day of earnings. And really and truly, this is a position that's gone completely wrong. And I know we have very high probabilities of success. When we put positions on, we're looking at between 70 and 90% chance of success on our positions. But that does mean that 10 to 30% of the time, this is going to happen. So what have we done in this situation? We could have just taken a loss. We could have just and in doing so, if we did take a loss, that wouldn't have necessarily been a bad thing, right? In hindsight, it actually would have been a good thing because the position has obviously just kept moving against us, but we couldn't have known that in advance. So what have we done? So this is the order chain. As you can see, we've done a ton of adjustments. We'd started off with a normal strangle, 16 delta strangle. As we can see, price just moved against us. So we've basically just been rolling the put side up the whole time. We rolled the position out here to the next expiration cycle. That's how we got stuck in earnings. And we've basically just been rolling, collecting a premium. Every single time we have rolled, the premiums haven't been that great, so we have been locking in a loss every time. The way we're going to get out of this position by getting to a break even is simply by adding duration. So we're going to sell time. We're going to sell time to offset the losses that we've been locking in with each roll. So truth is, this position doesn't look great right now, and it is going to take about, I'd say, at least 3 months to unwind and get out of this at a break even or a small loss or a small profit. So this is the opportunity cost, and this is why you need to keep your position sizing small, because if you don't want to be in a situation where you can't then make any new trades because this position is taking up all of your portfolio. Margin does expand. This is a naked position. You need to keep that in mind. Margin can expand 3-4 times more than what it originally is, what the original margin requirement is at the time of putting the position on. So this is the reality of it. This is the catch. We can still work our way back to a break even. The opportunity cost is time. We're going to have to sell time to do that. And obviously, if UAL can come back within our strikes, that will help our P&L as well. But basically, we're going to be selling time. So our total credit on this position is $10.89. Very, very nice. It's quite a lot of premium for a $70 underlying. But obviously, our mark price is not looking good. This is our open P&L right now. This is not ideal, but this is the reality of what happens. 70 to 90% of the time we'll be fine. 10 to 30% of the time we're going to have to bring out the big guns, manage risk, and this is exactly what that looks like, and just sell time. So with that being said, let's have a look at the position right now. 26 days to expiration, 23 days open since our last adjustment, or since the roll out in time, sorry, not since the adjustment. And we've got 26 days left. So sort of towards the end of the week, we're going to look to roll out in time. And if we were to roll out in time, we can't see what premium we'd typically be looking to collect at the moment. Market is closed. We can get a rough idea. Around $2 we'd be looking to collect. and that will slowly offset the difference between the mark price and our current collected premium, and we just keep selling time, and that's basically it. This is what risk management looks like in real time. So guys, with that being said, we've spoken a lot about the importance of position sizing. So how do you know how to size your positions? Well, we've got a spreadsheet here that's free for everyone to use. Link is in the description. The way it works is you're entering the size of your portfolio, and then below that you're entering what the current VIX level is. Everything below will then be automatically calculated for you, and you just simply use this information to form the backbone of your portfolio. It says here, for example, $700 for a VIX level of 16.3, $10,000 portfolio size. It says here $700, right? $700 is the maximum amount of buying power to allocate to a single undefined risk position. And if you adhere to that, even in the worst of cases, you'll be fine as long as your portfolio is nice and diverse, which isn't that difficult to do. Just use common sense. So that's how you can size your positions correctly. Link is in the description to get a copy of this. Click on free position sizing template and it'll take you to where you need to go. If you want to see the behind the scenes of what positions we're putting on, the adjustments that we're making in real time, so you can learn in more detail, again, link in description. Click on EDS Premium, get yourself signed up, and inside you'll have access to our portfolios. Like I said, you'll be able to see real-time updates and see how we're managing and adjusting trades, and also as well as new fresh trades that we place. There is a full course inside, so no prior knowledge is required. If you're completely brand new, it's fine. We'll teach you everything you need to know. It's a private community, so if you get stuck, you can speak with like-minded individuals. You can speak with myself directly. Right now, we are offering one-on-one complimentary onboarding calls because we have just started. That will no longer be available once we grow to a point where it becomes unfeasible. And that one-on-one call is directly with me. There is a 100% money-back guarantee. So once you study that full course, follow that trades for 6 months. If you haven't seen results for whatever reason, then we will work with you for free until you do, or you can simply request a full refund. So it's risk-free on your part. You get a free onboarding call. It's £1 a month. The price will be increasing. However, once you're in, the price is locked in. So you are rewarded for getting in early. With that being said, I will see you guys on the inside.